Good afternoon, Facebook. Today's question actually comes from an attorney friend of mine who practices in another state and in another area. And his question was, he's getting a lot of solicitations from a company called SoFi and from other companies out there offering to refinance his student loans. If he does that, would they be eligible for discharge in bankruptcy? And while I think it's a great idea, unfortunately, what we call the dischargeability of the loan actually goes back to the original debt. So student loans, as most of you probably know, are typically not dischargeable in bankruptcy. There's a section of the Bankruptcy Code that specifically prohibits it. That section applies to both Chapter 7s and to Chapter 13s. However, the definition of student loans is actually found in both the Higher Education Act and the Internal Revenue Code. And you have to really look at those to see whether or not the loan in question is actually a student loan. So this is where bankruptcy actually can help a lot of people, because a lot of people are taking out these large private loans not to cover the cost of tuition and books and fees and whatnot, but just to live on while they're in school so they don't have to work full time. We've actually had a number of cases where an individual took out money to fund their ongoing business concern as a student loan while in the course of school. And that money was not used for school. He had plenty of federal loans and scholarships that covered the cost of attendance, but he was using these other loans to run his business. In fact, there was another case where we represented somebody whose family was taking out student loans on their behalf to run their business. It was a restaurant. In those cases, we were actually able to discharge a good portion of those loans. Now, again, there are exceptions to every exception, and you can't really know unless you really dig into it with a very qualified attorney. Somebody who's willing to do the work and to actually review not only the loan originations, but also the bursars reports from various institutions of higher education, and to review the cost of attendance, the tuition fees, and everything else that goes into attending the university during the semesters in which the loans were taken. Now, going back to the original question, when you refinance a loan, it's refinance is what they call it with private loans. In federal loans, they call it consolidation. When you do that with your student loans, you're not changing the nature of the loan. Okay, so that still makes them non-dischargeable in a bankruptcy sense, if they were non-dischargeable in the first place. So it's something that definitely you want to look at and you want to consider. If you have a very large amount of private student loans, not federal student loans, but private student loans, it's probably worth spending the time and money to talk to an attorney to have them review that, especially if you're having difficulty in repaying those loans. The Bruner test, which is what covers student loan discharge in general, has been referred to as draconian in a lot of cases. We're hoping, we're lobbying on a regular basis to try to get that changed, try to get the drastic nature of that brought down some. I don't see that happening anytime soon, no matter what is being promised on campaign trails. It's just not something that's likely to happen until the country is really forced into it. Now, if you have any additional questions, feel free to hit me up on Facebook or on our website. That's graftonfirm.com. And we look forward to hearing from you. Thanks a lot.